This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Just explain something which is actually pretty bullish, right? It's quite a grand idea, all right? So like I say, I'll carry on with the rest of the stream. I just feel like I might as well put this out there on video afterwards. So I'm going to present the realistic prospect. I know how it's going to sound. I'm going to get shot down on YouTube for it. That we might have already hit a bottom, although we could come down to revisit that level and maybe even wick a little lower. I think that we might have already hit that bottom for stocks and obviously for Bitcoin. And obviously bear market, all criteria is here for bear markets, whether it's Bitcoin or traditional markets, and it's all being forced as well by things outside of the chart. As we all know, we go on about it all the time. But just looking at this chart, so we're just going to focus on Bitcoin for a moment. Now, you know how I always like to use the money flow index to spot particular areas of significance, arguably tops rather than bottoms. And we've looked at this, you know, in the past, and we were always waiting for this, saying, okay, we've got and this isn't the case just for Bitcoin, it's the case for anything. You get weekly money flow indexes, you know, on crypto especially, but you get it on stocks occasionally, but on crypto. Above 95 is a get out, basically, get out of town kind of vibe, right? So this is our bubble pop 2018. This is your massive parabolic run when the bull market began 2019, we all know that. And this is the beginning of the alt season. So Bitcoin did its run. It got very popular. It broke through previous all-time highs, went past 20,000, and then went all the way up to what was the price of the peak over here? 42,000, right? And it was very quick, and it left a lot of altcoins behind. We all know that. And that marked what would be a bubble pop. Now, if it wasn't for our read that we got on the Bitcoin dominance chart, where we're thinking, right, well, it's time to alternate into altcoins. It's rude not to. It's the most obvious situation right now in the world. And obviously a massive alt season, the biggest alt season played out afterwards, right? Huge. But for Bitcoin, it marked effectively what would be a bubble pop, right? That's the same sort of read that you'd see in a bubble pop. And then you saw a huge decline in the money flow index, huge, 74%. Bigger and faster. I mean, this goes, you know, into obviously, you know, your May dump and everything like that. So it was going down, and then it was pushed down the stairs in May as everything broke down a year ago, right? A year ago, right? So we think about things like in terms of bear markets for crypto, for Bitcoin anyway. You know, historically, crypto pops, right? And it's popped twice around roughly December in the past, but this time it popped. Well, actually, I mean, think about it. It was December, wasn't it? It was just a year early, really. If you think about it, it was a year early, and then you know, the rest of the entire market popped around May. And so what we're thinking about here is the Bitcoin chart itself popping in December 2021. So potentially what we'd look at here is, all right, this is like a bear market territory for us to look at just the money flow index, and we weren't presented with any price action at all. Just this. It would look like a pop situation, and we would get out, as most of us, you know, arguably didn't get out of Bitcoin. We went into altcoins, but yeah, this would be a get out of Bitcoin situation. So this is only the price actions on Binance, right? So we've got our bear market here and our bull market aspect. Effectively, the bottom was formed around December, but it didn't start to launch until about March, really. Into April, and so what we're looking at here is a 420 before. That's basically the bottom, the Bitcoin bottom. So from the pop to the absolute low, also matched on the money flow index, which also got bullish divergence on a weekly as well. It was it 420, a magical number, 420. So we've got a 420 day read, almost, give or take. We'll give it 420 just because you like the number, but over a year. And so this one less so, because this was at the I suppose at the beginning of a bull market. Everybody knew that things were going to go crazy, but there was a fine consolidation, and then it started to rally again from here. This is where Bitcoin rallied from 2019. No, actually, I'm getting confused. The rally, yeah, it was. There was a small rally here, and then in March it crashed again. But the money flow index kept on going up. Buyers were stepping in, and then a big pop took place around here. So we won't think about this one as much. It was a bubble pop, but different scenario, different set of circumstances, and obviously the money printers were turned on as well, helped everything go up. And now what we're looking at is effectively a pop. So if you think about this, is where maybe a bear market technically began in all fairness, and what we're looking at here is heavily extended. So we've got our 420 over here, similar to the peak of the last bull run into the full bear market retracement, and an accumulation period that began roughly around 420 days, yeah, and that would actually mark effectively the low on the money flow index over here on Bitcoin's weekly. So February 22nd, obviously that's not our absolute low at all. That was these lows, but it wasn't the absolute low. A new low has come in here, which could be a capitulation low similar to the one that we saw around here. And again, we're looking at extreme reads, obviously. Money flow index on the weekly in oversold territory, so don't hold on to that. We don't really use this to spot bottoms. It's much better at tops. But we're also getting a bullish divergence form here, as you can see, on the money flow index, suggesting something similar to what we saw around here after we got a capitulation, and we started to get, well, I mean, all the way down. So we got a read here, slightly higher here, more or less level, kind of higher, marking effectively the bottom. So I'm trying to make the case that actually the bull market top, you know, as far as volume is concerned, was formed around here, and then there was another read higher. We had a market crash, effectively, maybe the bubble pop, you know, an extended bubble pop caused by altcoins. Altcoins, as we all know, went crazy. We loved that situation, and people like me and probably other people were taking those profits into Bitcoin, because that's my trading style. I know for a fact it's a lot of other people's trading style. You just need to check the volume on Bitcoin to altcoins, you know, the popular ones. You know, they're hundreds and hundreds of Bitcoins in a 24-hour period. And so people taking profit into whatever they want and Bitcoin, forcing the price to go up as the volume significantly retraces, right? And again, I remember this at the time. We're saying, look, there's bearish divergence all the time on the weekly here, so we are on borrowed time. We got that dump, and this, as crazy and as amazing as it looks, is basically a dead cat bounce. So obviously this is Captain Hindsight talking here. We're looking back in time. We're trying to think about, you know, what's actually going on here. We know that the Fed is a main component to this. We know that it's correlated heavily with traditional markets, but we also know that they were rallying all at the same time as well, right? And that's why we could have found the peak of the bull run, you know, as far as volume, which accounts for price action as much as anything really, a year in advance. So your 4-year market cycle, you know, the Bitcoin 4-year cycle, and this time round was cut down to a 3. And if we think about the reasons for that, because again, there's always things going on outside the chart. So we got Federal Reserve pumping money into all markets. You know, cash was free. Everyone was just giving cash, and everyone was locked down. There's all kinds of reasons why markets basically peaked. And a market cycle is one thing, but a bubble pop is usually, you know, when liquidity is at its finest, at its all-time highest, right? When something becomes overvalued and just and you want to get out for a decent amount of money. That's why we always use the money flow index to spot a decent area to think about limiting your exposure or getting out altogether, especially when it reads something like 95 on a weekly. And so I'm making a case here that this was the peak of the bull market. Even though it wasn't represented by price, it was represented by volume, right, and excitement. And you remember what it was like at the time. Obviously, there was another wave that went past that, and again, charts helped us navigate through that as well, and we made the most of it. But if we think about it as in a bull market top, there's a lot of evidence to suggest that would be it, that was it. And so if we've been in a bear market, which obviously we are, it's quite clear that we're in a bear market. But if there was a bear market for Bitcoin, despite the higher prices, it could have easily begun there. And so if you really want to be bullish on this, I suppose, or try to think about where lows might form, time-wise and volume-wise, it would suggest that we're kind of approaching, if not already hit the low. Now, I know how that sounds. I know how it sounds. So, like I say, feel free to shoot me in the comments and stuff. But this is all trading is. It's trying to break down charts and speculate and work out the risk to reward. Now, I know that there's more stuff to this than just the chart. Whether you're looking at money flow index, RSIs, or whatever your favorite indicator is, there's old men at a table that are going to be speaking tomorrow. It's going to have an impact on this. We can already see what's happened to the Dixie. That's because the European old men and ladies were talking, and they're going to start raising rates over there, so that had a negative effect on the Dixie, so bringing the Dixie down. So there's things outside of charts that count for a lot, and we know that, and that's why we could think about the bull market actually peaking a year ahead of schedule, and effectively the bear market being reaching new highs while actually being in a bear market when it comes to volume. So it's a crazy theory, but if the theory, if we think about that theory and we apply time and divergences similar to what we saw at least in the last bear market, then we would think, all right, well, if that is the case, we've been in a bear market now longer than the previous one, and so effectively what we're looking at now is grinding the lows out, and we might be looking to be grinding them out for a prolonged period of time. Sorry, I'm just getting all the chart's going crazy here. Sorry about this, guys. But we're kind of looking at this. This is kind of feels like where we are. Now, it doesn't mean that you can just apply a fractal to this and go, all right, so we've hit the low, so we can't go lower. It's not the case. You could look at what happened in this portion, where obviously we're in a miniature bear market within the grander context of a bull market with a black swan, slicing right down the middle. But we had a big pullback down here, a capitulative low, and then we actually came down and double bottomed, actually made a wick lower, and that's where we sprung from, and actually would have probably leveled out around this $10,000 area if it wasn't for the black swan and all the other madness that came into the price. This is where things really started to correlate, I would say, with Nasdaq and traditional markets, because the things behind the chart obviously applied to all markets, so we had a big crash, that's heavily tied in obviously to all markets. Bitcoin hit just as all markets were hit, and the bounce and the parabolic and the euphoria came just as it did with everything else. Now, other markets didn't see this, this didn't take place, but this isn't as liquid as the traditional markets, so we did get our bubble pop for the entire crypto market. But I'd make the case that Bitcoin, you could like I say, actually we could just consider this to be the peak, and if that's the case, then we've been in effectively a bear market this entire time, and the highs and the lows that are formed from this level are kind of neither here nor there, and when it comes to time, we should be, if not already, approaching the low or hit the low, and we're looking to effectively reaccumulate at this lower level while confidence in the market is exactly the lowest it's ever been, similar to the way it was when I made my major entry point back down here. I remember people telling me I was an absolute idiot. And I said, no. I'm gonna put in quite a sizable amount here. Just bang it in. And if I'm not saying you should do it. And I says, no way, I'm not doing it. I'm not doing it. No way. Have you seen this? Have you heard what everybody's saying? The fear and greed index is, not that anyone was looking at that, but you see what I mean. The fear and greed index represents the fear in the market, which is absolute low. I imagine it would have been the same around here. So I'm trying to make the case to you now, based on volume and time, that we've already matched that of the previous bear market end. And although it's different, there are differences to it, and we can establish why those differences are. So the bull market for Bitcoin effectively peaking a year early because of all the things that took place in all markets, basically money printers being turned on, popped around here. Forget that we made higher highs, forget that, and forget what took place for altcoins. Although for altcoins, if anyone was back around here, altcoins did continue to rally after the bull market top for Bitcoin. There was a period of maybe 2 or 3 weeks where altcoins were going absolutely bonkers and crazy. So obviously this is longer than 2 or 3 weeks. This is more along the lines of like 2 to 3 months worth of craziness. But there is similarities to it, to the point where I thought, well, actually, thinking about it within that context, which again is less to do with the price and more to do with the volume and the sentiment, that it might actually we might have already hit that low, and if we do come down, to revisit that low, it might be the actual low, right? And any major wick down from this point now would just be ultimate capitulation on top of what's already been capitulation. So I think that we've already seen this basically, and we are in this area for Bitcoin now, although we don't know it and we don't really feel like it. So let's just, and again, fractals to me are always misleading, but if we think about what happened here, huge capitulation. This is a weekly, so we've got 1 week bang, second week broke down through that support, 3-4 weeks we actually came down to make an even lower low. But that marked the absolute low. Again, trying to spot the absolute low isn't all, that's a difficult thing to do. That's for heroes and people who like to leave comments on YouTube without any kind of way to substantiate their genius. So hopefully you can see what I'm trying to put across. I appreciate my communication skills are not the greatest. So we're looking at this in terms of time and volume, which are two components of pretty much all indicators ever made: price, volume, and time. So we're focusing on volume and time. And when it comes to volume and time, we've already hit what could be the absolute low, and we might be looking to accumulate at what could be the low, which again, we could come down lower, obviously, but in terms from risk to reward, what was it that Matt Damon says? Fortune favors the brave. This is the time to be brave. When the fear and greed index is extremely low, when the volume is low, when everybody's telling you never to buy and everyone's waiting for the next low. I remember that clearly here. And I waited a little while. I waited until it had reclaimed some moving averages before I bought. Obviously, didn't want to go absolutely crazy. But I took a big risk, and there was people telling me it's going to go down to 1,000 because that was the previous bull market top. That's where it's going to go down to. I'm telling you now, it's going to go to 1,000 or lower. It will go to a 0 maybe. And I was like, well, it might do, but where I see it going, it outweighs the risk. The risk is high, but the returns are higher than the risk, so it made sense, and obviously, it ended up being a very decent and very good decision. And I think we are looking at something very similar to that when we just think about volume and time and sentiment as well. So, but charts only, they don't represent sentiment; they just represent volume and time. So I'll put that piece of genius on the internet when I've finished the live stream. So I'll just turn this off now, and we can carry on with the rest of the live stream.